Hey traders, Jason here from Levitt Brothers. So in this video I'm going to talk about day trading with 5-minute charts. A very simple setup that I talk about in detail in my masterclass, which is available below this video. If you get really good at one simple setup, you could be set. Okay, uptrend or downtrend doesn't matter. Day trading is short enough term that it really doesn't matter what the dominant trend is. You can have a very simple setup that works, that kind of clicks with you, that you could execute pretty much every day, or certainly 3-4 times a week. So I'm going to go through a couple simple trades here. I'm going to show you a daily chart, and then I'm going to zoom in with the 5-minute chart to show you more details, and I'll show you step by step exactly what has happened. Okay, let's get to it. All right, so here is American Airlines. Okay, we are going to talk about the very last candle here. So the stock opened up here. You can see it tested higher, it tested lower. We don't know what the order is, and then it eventually closed here below its open. So let's zoom in with the 5-minute chart and see what happened, or see how this could have traded. Okay, so you can see the stock opened up over here, came down, tested the 21, trended up above its 8 moving average. Okay, and all these charts, the moving averages are the same. The light blue line is the 8, the orange line is the 21, darker blue line is the 50, and the red one is the 200. So stock comes up, tops out, comes back down. We have a negative divergence forms. Okay, with the MACD histogram here, we got boom, boom. So negative divergence, then the MACD crosses down. Okay, this is not an issue at first. Okay, because a stock could very easily let me delete some of this stuff here. A stock could move up, move down, and then continue up, and the MACD could trend up, cross down, and then cross back up. Okay, that's permissible. So the very first, even though we have a negative divergence here and then a cross, that's not an issue at first. The issue is at the MACD comes down, and then when it bounces back up, it does not cross back up over here. Okay, instead what happens is it just simply it stays in the trend down direction, and while it's continuing to trend down, the stochastic rotates up and then crosses down. So that the MACD is the trend, and the stochastic is a timing mechanism within the trend. Okay, so American Airlines tried to bounce here. Stochastic simply rotated up. The MACD told us the trend continued to be down. The stochastic cycled up and gave us a short signal, and then as you can see, the stock completely fell apart after that. Stock dropped from 1325, 1330 down to 1295 and such. So a 30-cent drop doesn't sound like much, but you do that with a couple thousand shares, you're making 600, 700, 800 a day. Multiply that times, say, 4 times a week, and that's not bad for just a relatively small position for a relatively boring stock that doesn't move very fast. All right, here is Dust, which is an inverse ETF for gold stocks. So we're going to look at just this candle right here. You can see it gap down, because here's the previous day. It gapped down, tested higher, tested lower, and eventually closed right here. We don't know the order, but that's the general gist. We're talking about a stock in the upper range of the 20s that basically moved from 25.5 to, like, let's just call it 27.5. So about a 2-point range. Now let's zoom in with the 5-minute chart and see how this could have been traded. All right, so Dust trends down below the 8 moving average. We have a positive divergence forms. Boom, boom. Okay, stock moves up here and gets rejected by the 21. When it moves up, the MACD moves up, and the stochastic comes out of this base, and it too moves up. Then we get a double dip here as the stock comes back down. During that double dip, the MAC never crosses back down. Instead, it stays in the trend up position. So that's the trend, and then so this pullback right here is essentially like a dip within a newly formed uptrend. And so it dips back down, stochastic cycles down, and then re-triggers and gives us a buy signal right here. Now, if you're buying over here below the 21, you just have to be aware of that. The 21, it tends to be very stiff resistance, so if you buy there, you got to have a tight stop just in case it can't get through. And as it turns out, it did get rejected here, but a couple candles later, it got above it and trended up nicely. Okay, so the stock went from 25.5, 25.6 up to like 26.5, 26.4. So that's a 1 point. Again, if you could nail that every day with a couple thousand shares, you're a full-time trader. Okay, a simple setup that you can get comfortable with, study, practice, learn the nuances of, that repeats day after day is all you need to be a full-time trader. All right, here is gold. This is the stock, not the commodity. So a stock traded in a range here. This is a daily chart, traded in a range here. Then as you can see, it broke down. We're going to look at this day right here. Okay, stock opened up here, it tested lower, it tested higher, and then it closed just a smidge above the open. The range is about from 4.7 to about 14.7 to about 15.2, so it's got about a 50-cent range. Let's look in closer to see what was available. All right, so here's the 5-minute chart. Stock trends up here above the 8 moving average. We have a negative divergence forms there and there. Crosses down, stochastic, crosses down, breaks a trend line there. So again, this is allowed to drop, find support, and then leg up, and the MACD could cross down and then cross up, and that'd be perfectly fine, okay? Because this right here is an uptrend, and I would consider this to be a pullback within an uptrend. So you have to respect the fact that it could go up, come down, find support, and then go up again. The warning comes when the stock bounces here and the MACD never crosses back up. So that tells you, the fact that the MACD didn't cross back up, this tells you the trend is now down. Okay, if the MACD would have crossed back up, then it would have been a continuation of the uptrend. The fact that it didn't tells you that the uptrend is over and a downtrend is starting. So at the same time that this bounced here, MACD remained in the downtrend position, and the stochastic, which is a timing mechanism, rotates up and then gives us a sell signal. So we got, and then you can obviously you can see what happened here. The stock trended down. So we got approximately from 15.15, down here to 14.95, 14.9, a little bit lower. Okay, so 20 cents, not great, but again, get really good at that. Do that every day, and you can make a living doing that. You get good at doing that with 100 shares, and then 200 shares, and then 500 and 1,000, and you got a stock that trades. This stock traded 19.1 million shares on Friday, so you could easily scale that up and do 10,000, 20,000 shares. You're doing 20,000 shares times 20 or 30 cents. You are certainly a full-time trader. All right, here's the next one, Mara. This is a daily chart. So Mara did well for a while. It had come out of a base here, a little cup pattern there, found support at 21. Trend lines aren't very good here, but moved up, traded into an ascending triangle, broke out, had some good volume over here, looked really good, but then it completely fell apart. It just fell, got trapped underneath the 21 here, fell hard again. So we're going to zoom into this day here. Okay, it looks like a totally innocent day. It looks like a day where the stock opened up here, tested lower, tested higher, tested lower, and then closed approximately where it opened. Okay, looks like a pretty innocent day. Looking at the scale over here, the stock moved approximately 1 point. Let's zoom in with the 5-minute chart. So stock trends down underneath the 8 moving average. We have positive divergence here. Okay. Then the stock pops off a low. When it pops off a low, the MACD crosses up. Okay. When I say, pops off a low and the MACD crosses up, all these other, like there's a pop off the low, there's some, there's an attempt to pop off the low, there's a little attempt to pop off the low, but in all cases, the MACD remained trending down. Okay. So in this case, the stock moved off a low, MACD crossed up, stochastic crossed up, got rejected by the 21 moving average, which is fine. I find that the very first bounce off a low or the first pullback off a high tends to get rejected by the 21. Then the stock settles in here, trade sideways in a range, and the MACD remains in uptrend mode. And while it's trending up, the stochastic rotates down and then starts to rotate up. Okay, so instead of this being, let me change colors here. So instead of this being downtrend, consolidate, and downtrend, we have downtrend, consolidate, but because the MACD stayed in uptrend mode, you have to consider the possibility that it is going to reverse. And that's what happened. So it moved sideways, then it broke out to the upside, okay, as you can see, and they came down, tested the 21, and continued up from there. And while the MACD trades or trends up, I should say, each dip of the stochastic is a buy. So that's a buy, that's a buy, that's a buy. The MACD is the trend. The stochastic is a timing mechanism within the trend. All right, one more here. No, two more here. Here's SOXL, which is the leveraged ETF for semiconductors. Kind of sloppy. Some big up days, some big down days. Lots of gaps. We're just gonna check out this day. Stock gapped up, tested higher, tested lower, closed over here. It's approximately like a 1 to 1.5 point range. And here's how it played out. So you can see it opened up here, came down and tested, moved up, came down, and when it came down, the MACD crossed down, and the stochastic was already crossed down. So again, that's not an issue. The issue comes when the stock moves sideways or tries to bounce. In this case, it moved sideways, or it could have bounced up. If the MACD over here could cross back up, then we're in good shape. Then it becomes stock moves up, moves sideways to consolidate, and then it continues up. But because the MACD could not cross back up, that tells you that the uptrend is over and a downtrend is in place. So what happens is this thing moves sideways, finds support at the 21 here. While it's moving sideways, MACD remains in the trend down position, and the stochastic comes up and breaks a trend line and trends down. So the MACD is a trend. The stochastic is a timing mechanism, so that gives you your short entry. And then as you can see, the stock dropped from like 14 down to the high 12. So again, simple setup, learn, study it, practice it, learn the nuances of it, and then if you could just do this like say 3 out of 5 days a week, 4 out of 5 days a week, because you're not always going to get a great setup. If you can just do it, if you get a setup 60 or 70% of the time, and you could pull off 50 cents here, $1 here with a few thousand shares, you could be a full-time trader. And then as you get better and better, then you can size up. All right, last one. Here's the triple Q short. So stock this is the daily chart. So we're going to zoom in over here to this candle. Okay, so we had this reversal, what looked like a reversal here, and then a gap down. It looks like it tested higher or tested lower, tested higher, and closed with a pretty good gain. So we're going to zoom in on that particular day. So here's the 5-minute chart. Stock opens up here, moves up, gets rejected by, in this zone between the 8 and the 21, moves down. So it pops off the low. When it pops off the low, the MACD crosses up. The stochastic had already crossed up, moves sideways, gets rejected by the 21. While it moves sideways, instead of crossing back down, the MACD remained in uptrend mode. So when that's the case, dips are buyable. So we have a buy signal there, but we have to make note that even if we buy this, which you definitely can, just make note that the stock is below the 21 moving average, and that's likely to turn it back. Okay, so you just got to be aware of that. So you have a tight stop on that. Then we get another buy signal here, and then it takes out the previous high there. So you get more buys. So while the MACD remains trending up, you get more buy signals over there, and then obviously you can see we get a nice trend to up move. Stock goes from like the high 43s up to the low or mid 47s. Okay, so just to reiterate, without even talking in detail about this, is that to trade you only need like one decent setup. Okay, one decent strategy that you can study, learn, practice, learn the nuances of, practice and get good at it. And after you get good at it, then you can size up. Instead of doing 100 shares, 200 shares, 500 shares, you're doing 5,000 shares, 10,000 shares, the exact same setup. And if the setup that I just showed you, which again I talk about in detail in my masterclass, if you can just do that, 3 or 4 times a week with 2 different stocks, you are pretty much set. All right, hope you got something out of this, and I'll see you next time.